Ever get that feeling? Like something huge is happening, but it's so complex, you just want the cheat sheet. Like cut to the chase, what really matters.
Totally.
Well, that's what we're doing today, giving you that direct line, a deep dive into the future of Bitcoin. And not the usual noise you know.
No hype.
We're going right to the source, someone who's been deeply involved since practically day one, someone who was actually emailing with Satoshi Nakamoto himself back in 2008, before Bitcoin even launched.
The summer of '08.
Right, summer of '08. So we've got excerpts here offering a rare glimpse, an insider perspective on how Bitcoin evolved, where adoption's going, and some seriously thought-provoking ideas about where the price could head.
Big picture stuff.
And as always, we're here to be your guides, making sense of it all without you getting bogged down in the technical weeds.
Absolutely. Extracting the core insights.
So mission for today is crystal clear. Distill the most critical understanding of where Bitcoin's headed from someone who saw it all unfold firsthand.
Saw it from the beginning.
All right, let's jump right in. Our source material kicks off with a pretty intriguing detail. An email exchange with Satoshi Nakamoto back in August 2008 about Hashcash. Now, for those following along, you probably know what Hashcash is, but what's so interesting about this early reference?
What's super fascinating is how much intellectual rigor Satoshi brought to Bitcoin right from the start. I mean, he wanted to properly cite Hashcash, the system for combating email spam, even in those early days. Shows how deliberately he was thinking about this.
So he wasn't just some random coder throwing stuff at the wall.
No, this was scholarly, like methodical building of a system.
And it wasn't just Hashcash on his radar either, right? The source also mentions Weidai's B-Money. Why was that important back then?
Think about this. Revolutionary ideas, even revolutionary tech, it always builds on what came before. B-Money, it was an early stab at decentralized digital cash. And Satoshi acknowledging that, it shows he was aware of the history, building upon those ideas, learning from what came before.
Not just out of the blue, a total invention. So fast forward to January 2009. The network launches, and our source is still in the loop, talking about early insights from users like Hal Finney. What were the core things people quickly realized about Bitcoin?
The thing that jumps out is what problem it actually solved. Like the crucial breakthrough. Our source really emphasizes that. Decentralization. You had earlier attempts at digital currencies, things like DigiCash, but they all had this central point of control, and that was their downfall.
Yeah, a single point of failure.
Right. Satoshi, he cracked that. He figured out how to make a digital currency that wasn't controlled by anyone.
And that came down to combining proof of work, right? Building on those concepts from Hashcash, along with that fixed supply schedule and the way it prevents double spending.
You got it. Those pieces were kind of floating around before, but Satoshi's genius, it was putting them together in that specific way. Proof of work to secure the network, predictable issuance to create scarcity, and a transparent ledger to track everything. You don't need a central authority anymore. Boom, that was the magic formula.
Okay, so we've got this incredible technology solving a big problem. But how did it go from this niche thing to something with real-world value? Our source talks about those early milestones, and they're pretty telling.
Yeah, that bootstrapping of value.
Yeah.
You solve the tech problem, but then how do you get people to believe in it, to assign it value?
The chicken and the egg, right?
Totally. And the source highlights when Bitcoin crossed $1, then $100, those weren't just random numbers. They were signals that this was more than just an experiment. People were starting to see the potential.
It was gaining legitimacy.
For sure.
Now, our source, they also bring their own deep history to the table. Cryptography, early e-cash systems, plus a real understanding of, like, the problems with traditional finance, inflation especially. How did all that shape their early view of Bitcoin?
Well, think about it. They weren't just some casual observer. They knew the tech. They saw earlier digital currencies fail. And they knew the issues with the existing financial system. They understood that whole centralized control thing, and they saw how inflation could be manipulated. So when Bitcoin came along, it's like all the pieces clicked for them.
It was the answer they'd been searching for.
Yeah, like a potential solution to these fundamental problems.
And that understanding probably led to exploring potential improvements to Bitcoin, like confidential transactions, right? For those listening, those were designed to boost privacy by hiding transaction amounts. Why were these advancements seen as so important, and what were the challenges?
You've got this public ledger, right? Transparency is good, but if everyone can see exactly how much you're transacting, that can raise privacy concerns.
Yeah.
Confidential transactions, they aim to address that. But changing the core Bitcoin protocol, that's a big deal.
Yeah, it's not like tweaking a website.
Not at all. It's incredibly hard because of this whole decentralized consensus thing. No one's in charge. So to make a fundamental change, you need a huge amount of agreement across the network. Everyone from miners to developers to everyday users.
So it's really resilient to change, but also really slow to change.
Exactly. It's a double-edged sword. You need tons of testing, review, buy-in from the whole community. So it's super stable, but making those core changes is a slow process.
Which is why Layer 2 solutions and sidechains became so important. For those new to this, think of them as frameworks built on top of or alongside the main Bitcoin blockchain. Why did that become the go-to strategy?
Think of it this way. You've got a solid foundation, the Bitcoin blockchain. Instead of trying to overhaul that, you build on top of it. Layer 2s, sidechains, they add new features, scale things up, all without messing with that core layer.
Like building new highways without tearing up the existing roads.
Perfect analogy. You get to innovate, try new things, but you still benefit from the security and stability of that base Bitcoin network.
And this focus on building, on expanding what Bitcoin could do, led our source to start their own company back in 2014. What was the driving force behind that?
Well, by then, I think it's becoming clear that Bitcoin had the potential for much wider adoption. And their company, they wanted to build the tools, the infrastructure to make that happen, especially when it came to institutional investment, how these big players could get involved.
Which brings us to what our source calls the third wave of Bitcoin adoption. Institutional involvement, maybe even governments getting in on the action. They see the first wave as those early adopters, the second as the broader access created by ETFs, and now we're in this third wave with big institutions getting involved. What's driving that?
What's really interesting is that Bitcoin, it's maturing as an asset class. In the early days, it was seen as this super speculative thing, but it's proven itself over time. Plus, you've got more regulatory clarity in some places. So now, these large institutions, they see it as a legitimate investment, maybe even a strategic asset. And the arrival of those Bitcoin ETFs, they've definitely made it easier for traditional finance to get involved.
And our sources company, they're directly addressing these institutional needs with their different investment funds. Let's break those down and think about why each one might appeal to different kinds of institutions. So first, the USD Yield Fund, which is collateralized by Bitcoin. What's the draw for a more conservative institution, like a pension fund?
Pension funds, they're all about managing risk, right?
Right.
They need stable returns for their beneficiaries.
Mm.
So the USD Yield Fund, it's structured like a loan fund, something they're familiar with. The Bitcoin, it's the collateral, the underlying value, but the yield they get, it's paid in US dollars. Fits right into their existing systems. And they even got the option to roll that interest into Bitcoin.
So they can dip their toes in without diving head first.
Exactly. Get some indirect exposure to the potential upside,
Yeah.
but in a way that feels less volatile.
Then you've got the Bitcoin Yield Fund, aimed at those already holding Bitcoin. Corporate treasuries, for example. What's the advantage there?
This is for companies, organizations that already have Bitcoin on their balance sheet. This fund lets them generate a return on those holdings, but in Bitcoin itself.
Mm-hmm.
It's relatively low risk, not like some of those DeFi platforms out there.
Make their Bitcoin work for them.
Exactly. They can increase their holdings without having to go through the hassle of active trading or anything.
And then the Bitcoin Alpha Fund. That one's for the folks with the higher risk tolerance, like family offices. What are they looking for?
Family offices, they tend to be a bit more flexible, willing to accept more volatility if it means bigger potential returns. So the Alpha Fund, it's all about capital appreciation,
Yeah.
active management within the Bitcoin ecosystem.
Trying to ride those waves.
Yeah, looking for those bigger gains.
Now, our source mentioned a really positive reception at conferences like iConnections in Miami. Did they notice any differences in the interest levels and focus among these different institutional players?
What was interesting was how closely their conservatism aligned with their initial interest. The family offices, being more nimble, they were interested across the board. Pension funds, though, with their long due diligence processes and responsibilities, they were laser-focused on that USD Yield Fund. Like that was their entry point.
That makes sense. They have to be so careful.
Definitely. Different needs, different risk tolerances, all playing out.
Okay, now for the big question everyone wants to know. Price. Our source dives into Bitcoin's historical 4-year cycles, the halving, and that whole theory of diminishing returns. Just for anyone tuning in who might not know, can you quickly explain how the halving affects Bitcoin's supply?
It's actually pretty simple. The halving, it's an event that's programmed into Bitcoin. Basically, every 4 years or so, the reward for mining new blocks gets cut in half. So fewer new Bitcoin are created, less supply coming into the market. And historically, after these halvings, the prices tended to go up because of that reduced supply.
Supply and demand 101.
Right.
But the theory of diminishing returns, it suggests that each cycle's price peak will be proportionally lower than the one before. But our source, they think this time could be different. Why?
This is where it gets really exciting. Our source lays out a bunch of reasons why this cycle could break the mold. One is the potential for what they call S-curve adoption. Think about how new tech spreads. Slow at first, then it takes off once it hits a certain point and becomes mainstream. Bitcoin might be entering that rapid growth phase now.
So it's like past those early hurdles.
Right.
They also point to all the buying that's happening right now. Those new spot ETFs, companies like MicroStrategy buying up Bitcoin, even continued retail buying. How does that demand stack up against the new supply?
Well, the numbers are pretty crazy when you look at them. Those ETFs, since they launched, they're estimated to be buying up about twice the amount of new Bitcoin being mined. Then you've got companies like MicroStrategy, they could be buying another 2 times the new supply. And when you add in the regular folks still buying, you're potentially looking at 5 to 7 times the amount of new Bitcoin being created in demand. And all this is happening before the next halving, which will cut that supply even further.
So way more buyers than sellers.
Well, basically, the supply-demand equation is seriously tilted.
And it's not just the amount of buying, it's who's doing the buying, right? Our source talks about these sticky holders. What's that all about?
This is a big one. A lot of the buyers this time around, they're in it for the long haul. You've got maybe 30% of those ETF buyers being institutions with a long-term view, and something like 70% being wealthier individuals who aren't going to panic, sell at the first sign of a dip. So a lot of that Bitcoin's getting locked up, further reducing the supply that's actually available to trade.
Like taking it out of circulation?
Exactly.
They also bring up this idea of gold rotation, meaning money flowing out of traditional gold ETFs and into these Bitcoin ETFs. What kind of impact could that have?
Well, the gold market is huge EE. If even a small percentage of those gold ETF holdings shifted over to Bitcoin, it would have a massive impact on price. And the thing is, the proportion of global gold that's actually held in ETFs, it's tiny compared to Bitcoin. So even a small reallocation from gold to Bitcoin could be a huge deal.
So that's a lot of potential fuel for Bitcoin's fire.
Yeah, a lot of things lining up.
So with all this going on, our source says a cycle peak between $500,000 and $1 million is possible. That's a huge jump from where we are now. Why do they think those kinds of numbers are even remotely realistic?
Basically, it's all those factors we just talked about. The constant ETF buying, corporations buying in, long-term holders locking up supply, and maybe even that gold rotation. All that demand, with less and less new supply coming in, it could lead to a much bigger price surge than we've seen before, like basic economics. And then, of course, you have the next halving coming up, cutting that new supply in half yet again.
So it's like strap yourself in.
Potentially.
Now let's talk about governments. Our source mentions this idea of a strategic Bitcoin reserve. Do they think that's necessary for Bitcoin to reach those kinds of prices?
What's fascinating is they don't think governments actually need to buy Bitcoin for it to happen. Like the demand from private investors might be enough to push the price up significantly. But they also say that if a major government, especially the US, came out and said they were creating a Bitcoin reserve, well, that would be a game changer. It could spark a global race to buy Bitcoin, and prices could go way beyond $1 million.
So it's like a potential catalyst.
Absolutely.
They even talk about the possibility of governments selling gold reserves to buy Bitcoin. What are the practical and political hurdles there?
That's a tough one. Governments, they hold gold for a lot of reasons. It's strategic, it's historical. So the decision to sell a chunk of those reserves to buy Bitcoin, that would be a huge deal, politically speaking. It could have massive implications, but it's really hard to predict because of all the politics involved.
Too many moving parts.
Definitely.
Okay, let's bring it back to Bitcoin's core value proposition. Our source talks about it as hard money, a self-sovereign store of value in a world where inflation is manipulated and systems are centralized. Why is that so important for Bitcoin's long-term success?
If you think about what makes good money, Bitcoin checks a lot of boxes, especially in this digital age. It has a fixed supply, no one can just create more out of thin air, and it's decentralized, no one controls it. That makes it a hedge against inflation, a way to protect your wealth from those who might try to devalue it. And in a world where people are losing trust in traditional institutions and government-controlled currencies, Bitcoin offers an alternative. It's transparent, it's auditable, it's built on math, not trust.
So it's like a safe haven.
In a way, yeah.
Now, in the early days, there were concerns about Bitcoin's survival, governments banning it and things like that. Our source thinks those major threats have mostly faded. What are the big focus areas now for Bitcoin to keep growing and become more integrated into the financial system?
I think the focus has shifted to making Bitcoin more practical, scaling it up to handle more transactions, making it easier for everyday people to use, and figuring out how to seamlessly connect it with existing financial systems. Those are the challenges for the next phase of adoption.
So making it more user-friendly, basically.
Exactly.
All right, so for everyone listening, we've gone deep, a true deep dive into a unique perspective on Bitcoin. From those early days and the insights of the OGs, through its evolution and how institutions are getting involved, all the way to some seriously bold predictions about its future price based on the current supply and demand dynamics.
What's wild is the Bitcoin story, it's still being written. Whether it becomes this global currency or digital gold or something we haven't even thought of yet, it's clear that scarcity and decentralization, those core principles, they're driving this whole thing.
And with that in mind, one final thought for you to ponder. In a world that's increasingly digital, increasingly uncertain financially, what does it mean to have a decentralized, scarce digital asset like Bitcoin? What happens as it keeps growing and more people adopt it? What does that mean for the future of finance, for individual control over your own wealth, for the very concept of money itself? It's a question worth wrestling with.
No easy answers.
Nope, but lots to think about.
For sure.